with markets having trillions wiped and Ren sitting here feeling greedy, we have a question that is coming from Luke about how we're personally investing.
Yeah, now this wasn't a voice note, just via the contact form, but he asked, with this market crash, how are Bryce and Ren thinking about buying in? Are you adding equally to your core and to your satellite, or focusing on one? Also, I was wondering about timing. Obviously, it's going to be hard to pick the bottom, so what is your strategy for buying in? Great question, timely question, not the only question we've got along those lines. It's certainly, it's obviously front of mind for everyone how to play this moment.
Yes.
So why don't you start, Bryce? How are you playing this moment?
So I have taken the opportunity to do a total portfolio review
Okay.
because I look back on
How far are you down?
shitloads.
Okay.
Yeah. Let's just say, the leverage, I know the risk I'm taking with these leveraged ETFs.
Yeah.
And in moments like this, I remind myself why I should have listened to Charlie Viola when I spoke to him at the start of the year and he told me to de-risk a little bit because so much of it was concentrated around the US.
Well, yeah. Shout out to the YouTube comments who have been having some fun with your leveraged ETFs as well. Yeah.
Look, don't get me wrong. I know the risk I'm taking.
Okay, so you're doing a total portfolio review.
Yeah, because look, I look back on some of the big moments that we've spoken about, most recently 2022 and COVID, and I felt like you've said it many times this episode, we look back in hindsight and at them being great buying opportunities. And I never really went for it. I just kind of kept doing my strategy throughout that period, which is completely fine. But this time I have taken a bit more of an active, opportunistic approach. So earlier in the week, I put more money into my index funds as a starting point. Because for me, it's like I hadn't really gone through all of my stocks and really determined what I wanted to do there, but it felt like a good time with markets absolutely wiped to put money into my index funds. So that's what I did, 4 ETFs, money in. Then I'm having a look at my thematic ETFs. ATEC, the Australian technology, is looking pretty good. It's been wiped a bit, but it's full of those quality Aussie companies, not the banks, not the miners. And so I'm pretty interested in that one. And also my Fairlight position with, my small caps position with Fairlight. I'm going to have a look at that and probably put a little bit more in there. In terms of individual companies, I mean, in my portfolio, Alphabet, Eli, Berkshire, which has actually done incredibly well this year.
Yeah, because he's got 330. He timed the market perfectly.
He nailed it, yeah.
I saw some stuff today that was like, this is Buffett. He is going to prove that he is the GOAT by watching this market turn down and then deploy 300 billion in the most opportunistic moment and just set Berkshire up for the next however many.
It's wild.
But just remind everyone that
it's wild.
This is why he's the best.
I saw he's like the only billionaire in the top 20 billionaires or something this year to have increased his net worth.
Yeah, right.
He's up 13 billion. Musk is down 160 billion. Anyway, so I've got Alphabet, Eli, Berkshire, Supermicro, and of course Bitcoin, all of which have taken a pretty decent haircut. So I'm going to review those positions. But to be honest, I'm at a point where I just need a little bit more capital. I took some money out of the offset to put into my indexes, and for me, that's like I just wanted to take the opportunity to get in on those. And I'll assess the others over the coming weeks because who knows what's going to happen from here. So yeah, I think for me the fact that this 20% drawdown doesn't happen too often, although we said it's been more frequent in sort of the past decade, but I took the opportunity to get in.
Nice one.
Yeah.
Yeah, Eli Lilly down about 25% from its all-time high.
And I just look at that being like so bullish. We've spoken about it on the show. Yeah. Just like long-term bullish on the trend, how they're positioning themselves, the development in drugs. Like, I think for me, I haven't felt like going out and buying all these new positions. It's like, what have I got in my portfolio that I'm still super bullish on? And can I just take this opportunity to put more money in there?
Yeah. So I am similar to you in terms of how I'm thinking. I guess for me, my core strategy, I'm not going to top up my core ETFs. For me, it's like I'm going to keep dollar cost averaging into those. I get the benefits of lower prices with my regular investing. You can buy more with the same dollar amount invested. So I'm not really thinking about changing anything there. I'm just going to keep doing what I'm doing, keep it automated, keep it ticking along. I am focusing on my satellite with the money I have spare, and I'm really glad that in my automated financial structure, every time I get paid, money goes automatically transferred to different accounts. One of those is a satellite investing account, and so that just means I've got some dry powder, essentially.
Yep.
I will not have that dry powder for long.
Yeah.
Well, I don't know. I'm not going to just spend it all this week, but like in this downturn.
Yeah.
Which is the point of having it.
Definitely.
So then the question is, all right, well, where do I want to spend it? I have this note on my phone of stocks to research, things we hear about on the show. And one section I have in there is like never cheap stocks.
Yep.
Stocks that you just hear over and over again that are like high quality, but they just always are expensive. Mm-hmm. And so you can be so convinced on the thesis around the company, but you can just never be convinced around valuation. And so for me, like that never cheap list becomes a little bit of a watch list at times like this. And to be honest, I was doing some research on them this week, and none of them are cheap at the moment.
Yeah.
Pro Medicus has a price to earnings above 100. It's like things haven't fallen that far yet. But some of the names that I'm looking at, some of the names that are on this list in Australia, you've got the likes of Xero, Pro Medicus, Cochlear, REA Group, WiseTech, although it has got a little bit cheaper recently. Audinate also got a little bit cheaper recently. In the US, some of the big tech names, the ones we always speak about, Eli Lilly you've spoken about, but like the Visas and the MasterCard, Axon Enterprise, a company I love, Intuitive Surgical, those Da Vinci machine robots.
Yeah.
Just love those machines. We heard about Nubank, the Brazilian fintech, on the show recently on a Pimp My Portfolio. So just companies like that are just like, that trade at crazy valuations, but are incredible companies.
Yeah.
So they're some of the ones that I'm watching. None of them really have fallen into the like pull the trigger stage yet.
Yeah.
One that I was looking at this morning is Reddit.
Yes.
It's like the 5th most visited website on the internet, but it trades at a massive discount to some of its other peers. But it doesn't monetize in the same way that some of its peer websites do. But I was having a look at it because it's down 60% since February. So it's really been whacked. And that's despite turning profitable in the last 2 quarters. It did about 71 million in profit in the most recent quarter. If you annualize that and then you look at its current valuation, it's still trading on a price to earnings of about 60.
Wow.
So again, like a lot of these stocks are like they're falling, but they're still
It's not a fire sale.
They're still not cheap.
Yeah.
And so for me, that's probably the question around where I'm looking, but also the question around timing. It's I'm not sure there's anything that's like a screaming buy yet. So, if things keep falling, that's probably where I'll be looking. If things kind of plateau around here for a little while, I guess I'll just slowly start averaging into some stocks I already own. Maybe top up my core ETFs if nothing really stands out. But I think the takeaway is the powder that I've got dry, I'm not going to miss deploying some of it.
This chance, yeah. I would say if you're looking at individual stocks, be cautious about the impact on tariffs. Because
yes.
Yeah, well, I mean, like if you're just sort of willy-nilly throwing money around just because things have gone down, that's obviously not the way to do it. But particularly with individual stocks and a lot of uncertainty at the moment, definitely do some research on the impact of tariffs. I just want to give a shout out to the Facebook group again, Ren. There was a post in there yesterday. Since everything is on sale, what are you buying? Many comments coming through, but it's good to see a lot of the community. Obviously, right up the top, a lot of the favorites: DHHF, VAS, IVV, NDQ. A lot of people looking at Macquarie. So everything that we've sort of spoken a lot about on the show, that long-term, low cost, people are taking the opportunity. So love to see it.
Love it. Well, let us know what you're looking at in the YouTube comments, in the Spotify comments now. You can do comments there, or hit us up, equitymates.com/contact. Would love it if you left a voice note with what you're buying, or just any questions that you have. And we're going to be on top of this story for as long as it lasts. So make sure you're subscribed wherever you're watching or listening to keep up to date with what's going on and how we are approaching it. But Bryce, that'll do us for today.
Love it.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.